Hello, everybody, and thank you for joining us. My name is Nora Rowan Schmidt, and I'm the Executive Director at Starting Block Madison. I'd like to thank our partners for joining us today, who not only contribute to Starting Block and the Madison ecosystem, but the entire state of Wisconsin entrepreneurial ecosystem. I'm fortunate enough to have with me Wipfli, Associated Bank, and the SBA. So Lisa, Terry, and Andrew, if you could just briefly introduce yourselves, and then we'll get started.
I'm Lisa Taylor. I'm an outreach and marketing specialist with the Wisconsin District Office of the SBA, and I work with our partners in economic development as well as small businesses to provide additional information about what we do at the SBA, provide some education, and lately, of course, we've been talking a lot about the PPP program.
And I'm Terry Hoover. I'm a partner with Wipfli CPAs. We're a top 20 CPA firm nationally, headquartered in Milwaukee. I'm located in our Appleton office. I specialize in all manner of startup issues, taxation, structuring, and the like. And I serve as part of our national PPP Loan Assist Team.
And I'm Andrew Brueggemann from Associated Bank. I'm a strategic product manager for Associated Bank. I manage our product segment for our small business customers. I have more than a decade or 2 decades of experience with small business owners and specifically government guaranteed lending.
Great, thank you, and welcome to all of you. Lisa, if you'd like to get started with your presentation.
You bet. So as we move through this today, I'm going to be providing information about the PPP relaunch and some of the updates. We'll talk about some key dates. We'll talk about first draw PPP loans, second draw PPP loans, some updates on the forgiveness parameters of this program, and then what to do now. And as I move through this, we're going to have Terry and Andrew, who are the real experts in this program, jumping in with some additional details for you. So when Congress signed or passed legislation on December 27th that included these changes that we're going to talk about today to the PPP program, their intent was also to increase access to the program for the hardest hit small businesses, as well as those businesses that tend to be underserved. So to that end, they did open up the PPP loan application portal last week to our CFIs, which is a certain set of lenders that serve those that are in the underserved communities. And they're also leveraging their lender match platform, as well as having us out there providing training and materials and assistance as we move through this program. So some of the key dates when it comes to the PPP program, as I mentioned, some of those dates happened last week. On January 11th, the PPP opened up for first draw loan applications from CFIs. And CFIs include our community development financial institutions, our microloan lenders, certified development corporations. So those lenders that serve certain businesses. And then on the 13th, they opened up for second draw from those same CFIs. Then on Friday, the 15th, they opened up the PPP program to some of the small community lenders. And then yesterday, actually, on Tuesday, the 19th, they opened up that PPP portal for first draw and second draw applications to all lenders that are participating in the PPP program. The other key date is March 31st. So if you are submitting for a first draw loan or for a second draw loan under this program, you do have to submit your application by March 31st. That is the deadline, unless the appropriations or the funding for this program run out prior to March 31st. Now, we have been told by SBA that they feel that the money that's been set aside for this program by Congress is sufficient to meet the demand for small businesses that would like a first draw or a second draw loan. So what is a first draw PPP loan? Well, if you are an eligible applicant, and we'll talk about eligibility in a moment, and you did not receive a PPP loan prior to August 9th of last year, then you'll be eligible to do your first draw PPP loan now. And again, that portal opened up for all lenders as of yesterday. So the PPP loan eligibility is now going to include some additional types of entities. And again, we're going to cover that in the next slide. There are some additional eligible expenses for the PPP funding, and those are going to include some operational expenses. It's going to include if you've got property damage from civil unrest. I'm sorry, I'm just taking a look at my list here. It's also going to include some supplier costs, and it's going to include worker protection expenditures. So if you had to purchase hand sanitizer or plexiglass shields or masks for your employees, that's now an eligible expense as far as spending your PPP funding on. And there is a more complete list of these expenses when you take a look at the application form.
And if I could offer, Lisa, from the borrower-facing direction, we found that these changes now have made it much easier for especially severely impacted businesses to still get full forgiveness of their round one loans. Many businesses were struggling with staffing and not being able to bring employees back productively, and the consequence was they weren't spending out all of their loan within the covered period choices they had at that time. These changes make that much, much easier to work with to get to full forgiveness.
Great, thank you.
Yeah, and Lisa, to build on that, some of these changes are retroactive, so they do apply to those customers who have gotten a first draw loan previously and are in that either forgiveness or covered period window right now. So it is allowing for a little bit more flexibility for those borrowers that are already received a first draw but haven't been paid out on forgiveness yet.
Okay, great. Great information. The other change that came about when we're talking about first draw PPP loans, last year, if you applied, you know that your covered period was either 8 weeks or 24 weeks, and there wasn't really anything in between. It was either 8 weeks or 24 weeks. Now you as the borrower can choose your covered period of anything between 8 weeks and 24 weeks. And that's not something that you have to decide right when your loan is dispersed. You can certainly decide that as you are using the funds and then when you go to apply for forgiveness. Oh, Terry, did you want to say something?
Oh, I was just going to add, and we now have the new version of the forgiveness forms were just released and posted by the SBA that allow you to make this what we call a self-select covered period. And I would echo, your comments, Lisa. This is, again, another very borrower-friendly, powerful provision that lets you sort of tailor your forgiveness circumstances to get to hopefully full forgiveness on both round one and round two, hopefully.
Mm-hmm. Good. One of the other changes is that certain borrowers are going to be able to request an increase on their original first draw PPP loan from last year. It's a very small subset of borrowers. It's going to include partnerships or seasonal employers or farmers whose max loan amount calculations were further clarified as the program went forward last year. So in essence, if some of those folks had applied for a PPP loan and under the existing rules at that time, they received less than what they could have once those rules were clarified, they would be eligible to go back to their lender and request an increase on that original PPP loan amount. Additionally, that would include borrowers who may have been eligible for more of a loan amount, but for some reason chose not to accept the full loan amount that they were eligible for. So that's what that is referring to.
Lisa, I had a question related to that. With the ability to make those first draw modifications, it's a great accommodation for it when it fits a customer for that, and especially for those that may have return funds under the safe harbor time period. It's my understanding the SBA's E-Tran portal will be facilitated to make those changes. However, the changes aren't available. Lenders can't make those changes just yet. They're still waiting for some technical releases within that portal to be able to accommodate that.
Okay. Thanks, Andrew. Yeah, Andrew works with the system where lenders are submitting all of these PPP applications. So he works with that daily and knows kind of all the ins and outs of that. So that's some great insight for both borrowers and for lenders, Andrew. And then finally, we did mention this before, that the deadline to apply for a first or second draw PPP loan is March 31st, or again, until the appropriations expire. But again, we've been told that they feel that what they've set aside for these programs should be enough to meet demand. One other change, kind of from a lender perspective, is that when a lender is sending the applications for first draw, second draw PPP loans up to the SBA, last year the lender would immediately receive a loan number for that application from the SBA. This time they are waiting a little bit. There's going to be a little bit of a lapse between when the application is received by the SBA and when the lender receives that loan number. The purpose of that is so that the SBA can do some due diligence up front in checking for fraud when it comes to these loan applications. Okay, so let's talk about first draw PPP loan eligibility. If you were eligible last year for the 2020 PPP loans, you are still eligible, and that would include business entities, for-profit that are partnerships, corporations, LLCs. It also includes sole proprietors, independent contractors, or self-employed individuals that don't have employees. It also includes the 501c3 nonprofits. It includes those 501c19 veterans organizations, and it includes tribal businesses. With the new legislation, they have also included some additional entities that are now eligible for a first draw PPP loan that last year weren't eligible. So that includes housing co-ops, destination marketing organizations, news organizations, and it also includes certain 501c6 organizations, such as chambers of commerce. So those folks are now eligible to apply for a first draw PPP loan. All right, so let's talk about the second draw PPP loan, which is exciting for a lot of people. And you are eligible for a second draw PPP loan if you previously received your first draw PPP loan last year, and you have under 300 or less employees. And you do have to show that you suffered at least a 25% reduction in gross receipts from one quarter in 2020 versus the comparable quarter in 2019. And we will talk about that a little bit more on the next slide. This slide is talking about how you can calculate your maximum loan amount under the second draw PPP. Most borrowers are going to fall into the category where the maximum loan amount is 2.5 times their average monthly payroll for either 2019 or 2020, up to a cap of $2 million. Now, for those borrowers that are in the accommodation and food services sector, where your NAICS code starts with a 72, your maximum loan amount for the second draw is going to be 3.5 times your average payroll for either 2020 or 2019, and again, up to a cap of $2 million. And there is a special form that you would apply for the second draw using now your lender is going to have that. So when it comes to applying for this draw and using the correct form, you're going to work with your lender on that because they will have that form available for you.
Yeah, and Lisa, if I could interject there, the existing lenders and existing borrowers who received a first draw application can apply with the institution they got their first draw loan with, or they can apply with a different financial institution that may be offering these PPP loans. So you're not required to apply at the same one. I would also encourage or advise many of the businesses out there that your incumbent financial institution that did that first draw may have some additional information for you, and the process for application might be a little bit simpler because they already have some of the same payroll information and other information you might need to support your loan amount if you want to use your 2019 information. You're not required to use the same lender that you did for your first draw. You could still apply with a different financial institution if you choose to.
And I would offer, Lisa, that this is an area where we've seen a fair amount of confusion amongst our clients that were round one borrowers. One area of confusion has been the borrowing base and whether or not in round one, for example, where they used their trailing 12 months payroll from the end of March of 2020 back. Can that still be used again? One of the benefits of working with an incumbent lender is they already have that data on file. However, the answer is no. Now the choices for round two are limited to calendar year 2019 payroll, calendar year 2020, which for many is going to be less and really isn't a reasonable choice. Or you can also choose the trailing 12 months basically from today. If you were to apply today, hopefully be funded within a few days. What we're finding is that we now need to go back and look at calendar year 2019 data for those clients that used a trailing 12 months of last March and resubmit that data to their lender. And I've actually had cases where that's resulted in a larger loan than round one did because on a trailing 12 months basis, sometimes payroll was declining and many businesses were at or near their peak of employment at the end of 2019. So just a word of caution to borrowers, they really need to punch through all three alternatives on the table to make sure that they maximize their loan appropriately.
Yeah, absolutely. I completely concur with that, Terry. Working through the multiple scenarios, either individually as a borrower or working with your accountant or other valuable resources to come up with the appropriate number there, it might allow you to maximize the benefit from the loan program available.
Thank you. Great insight. So let's talk about a little bit more about loan eligibility when it comes to the second draw. And again, we said that you had to have previously received a first draw PPP loan, which would have been last year, and that you've used or will use your full funding from your first draw only for eligible expenses before your second draw loan is dispersed. Additionally, oh, go ahead.
I was just going to offer, and that is another area of great confusion, I believe, amongst potential second round borrowers. That does not imply that you must have received full forgiveness for your round one loan, because the round one rules allow you, excuse me, to continue to spend any round one loan proceeds after the end of your covered period, so long as they're spent on permitted purposes. So it's not correct to say that we must have received full forgiveness for our round one loan, but rather that we've spent all of the funds or will have spent all the funds before we get our loan on permitted purposes.
Yep, absolutely. Thanks for that clarification too. And again, you have fewer than 300 employees, or I should say no more than 300 employees. And you need to demonstrate that you've had at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. So for instance, if you take a look at your financials and you choose third quarter of 2020, you're going to go back and look at third quarter of 2019, You're going to calculate the gross receipts for both of those quarters. And if you can show a reduction in 2020 Q3 of at least 25% over Q3 of 2019, that is makes you eligible for the second job PPP loan as well.
Yeah, and I would interject there, Lisa, a couple common things we're seeing from many of our borrowers are a question about, does it have to be a calendar quarter? And what if I am I report my business financials on a non-12/31 fiscal year end. So yes, it must be a calendar quarter. It can't just be a 3-month period, 2019 versus 2020. And they're pretty clear on, you have to have that same period, 19 to 20, that you're referencing. The administrator also did clarify that you have the ability to use an annual option for those small businesses that would choose to use an annual option, and that is available to them as well.
And to that, I would also add, Andrew, there are all manner of things that can find their way into gross receipts in a typical small business financial statement. There are some exclusions available, such as, for example, retailers that collect sales tax and choose to report it as part of gross receipts and then take an expense as they pay out the sales tax. They're really just agents for that collection. And so the SBA calculation rules allow you to remove those sales tax receipts from your gross receipts for purposes of running this test. Now, of course, you have to do that consistently with your reference period quarter back in 2019 as well. But just another example of the sort of granular nature of some of these calculations. We've seen situations in a whisker of qualifying, and when we go back and troll through the details of their gross receipts, we often find things that are validly excludable and can make them eligible.
Great, thank you. Okay, and then we'll talk a little bit about loan forgiveness. As I mentioned before, there were some parameters that have been updated or changed with this latest legislation. We will start out by saying that when you're applying for forgiveness, you're going to go back to the lender that dispersed your loan to you. So whoever you applied for your loan through the first time around, when applying for forgiveness, you do go back to that same lender. And the updates that came about with the Economic Aid Act, some very good news is that the idle advances are no longer deducted from your PPP forgiveness amount. So if you remember last year, if you applied for the idle advance, the economic injury disaster loan through the SBA, if you received an advance, which would have been that amount between $1,000 and $10,000, that was supposed to be a grant. The rules from last year's PPP program said that they were going to deduct that idle advance from your PPP forgiveness amount. That is no longer the case. The recent legislation says that that will no longer be deducted from your forgiveness amount, which is great news for a lot of people. Additionally, and this is where we're going to definitely bring in our tax expert here, the rule has been, even previously last year, that forgiven PPP funds were not taxable income at the federal level. And that is still the case. The forgiven PPP funds are not taxable income on your federal tax return. The change comes this time around is that expenses that were paid with PPP funds are now tax deductible. Previously, the legislation had said that the expenses that you paid with your PPP funds, and in particular those forgiven PPP funds, would not be tax deductible. That has been reversed. And at a federal level, those expenses are now tax deductible. There's differences at the state level, though, that I know that Terry's going to talk about.
That's right, Lisa. Here in Wisconsin, unfortunately, the process by which the Wisconsin tax code follows the federal tax code is different than in many states. It requires an affirmative act of the legislature to adopt this non-taxability, or I should say deductibility of expenses paid with PPP forgiven funds. At this moment, in fact, this past Friday morning, the Wisconsin Department of Revenue released a notice saying that we are not conformed to federal treatment, and therefore forgiven loan expenditures will be non-deductible. So effectively, you'll be taxed on the value of your PPP forgiven loan. That causes all sorts of consternation. First of all, for many small businesses, especially those that are proprietorships or operated as single member LLCs, that may affect the estimates that would be due on your personal tax liability that were due this past Friday, the day that the department released this position. So our first order of business is to address whether you've properly paid in estimated taxes, assuming the worst, that we have to now treat these as non-deductible expenses. Then, of course, in April, one will either have to pay that tax to Wisconsin or include it in an extension calculation. We're hopeful that the legislature will address this and specifically adopt this provision. That process is ongoing right now. In fact, there is discussion in Madison about that. But at this moment, the law of the state is that these are non-deductible expenses. The other thing I would offer in this is that for those in the audience that claim Wisconsin R&D tax credits, there could be an unintended consequence on the level of your credit because of this provision if Wisconsin doesn't conform to the federal position. And that's because one of the drivers of the size of your credit is your eligible Wisconsin R&D payroll. Well, to the extent that you aren't able to deduct some of that payroll, it could result in a lower credit. So there's a bit of tradecraft in how you go about filing for forgiveness in order to ideally still maximize that Wisconsin credit while still getting maximum forgiveness possible. So I would encourage, excuse me, anyone in that situation to certainly reach out to their tax advisor.
Absolutely. Thank you, Terry. See, I told you Terry and Andrew are really the experts on all of this. So the next point talks about the expanded forgivable expenses. So as I mentioned, there's some additional non-payroll costs that are now included as far as being eligible to spend your PPP loan funds on and then be forgiven for. There's a good list of them actually in the instructions to the forgiveness form, the 3508S forgiveness applications. It does a good job there of listing out what those additional expenses are. But in brief, I'll just review them again. There's some operations expenditures, such as software that you may be using for HR or for accounting, the property damage costs that are not covered by your insurance when it comes to civil unrest, some defined supplier costs, and then worker protection expenditures, so that personal, the PPE that you had to purchase for your staff when it came to the pandemic, those are now included as forgivable expenses when it comes to the PPP program. Mm-hmm.
And because these are retroactively qualifying expenditures, this is one of the tools of that tradecraft I referred to in still maximizing forgiveness while preserving ideally any Wisconsin credits that you might be eligible for. We've seen situations where it's possible to not claim payroll for R&D purposes for those folks that are involved in your R&D effort, and instead sort of backfill your expenditure bucket with some of these new covered costs. One of the great supplier costs that are available for those that are in manufacturing is anything that you had an open purchase order for at the date of funding of your round one loan. As you receive and pay for those goods, those become eligible covered costs. And for many, that can be a very significant part of their cost structure. So again, we want to consider all of the opportunities here to pull these new costs in and still preserve other unrelated benefits.
So Terry, building on that, is the forgiveness application that a borrower submits to their lender the foundational document for the establishment of the amount of loan proceeds used for payroll versus other expenditures when it comes to the R&D credit?
We believe it certainly could be. The Department of Revenue has not taken up this position yet. This is also relatively new, and it obviously could be obsoleted if the state chooses to conform to federal deductibility of PPP expenses. But our belief is that we don't want to create any confusion or illusion that we somehow deducted our R&D costs as part of our loan forgiveness, which could cost us credit. So our best advice is to explicitly exclude those people that were traditionally part of your R&D effort from your payroll calculations.
Okay. And one thing that has not changed when it comes to maximizing forgiveness under this program is that the 60-40 ratio still applies, which says that to maximize forgiveness, you need to use at least 60% of those PPP funds on eligible payroll costs, which means that no more than 40% of those funds can be used on eligible non-payroll costs. And then the final bullet point here, I should have updated, but a change happened kind of in the middle of the night, and I did not go back and update this slide, but this slide says coming soon, we will have a simplified forgiveness application for PPP loans of $150,000 and less. And we actually have that form. So that form was updated and released sometime last night. And it is again for those borrowers that have $150,000 or less as far as their PPP loan amount goes. One thing I will say is that the good news with this is that on a national level, that should apply to about 87% of you as borrowers. We found that about 87% of borrowers had loan amounts of 150 and less. So that was the good news.
Yeah, and I would echo that. It's a really great thing for a large portion of borrowers for their first draw applications, as well as we're seeing our second draw applicants with a much trending lower dollar size. What I would say though, because it was just published last night, for any of you that are out there looking to apply for forgiveness, you may have to give your lender a few days to get that operationalized, as well as to allow for those electronic submissions through the SBA portal, because that's not quite available yet, but great movement here. I'm glad to see it.
And Andrew, that might be a good point to raise something you had mentioned earlier about the timing of application for round 2 while there's a forgiveness request pending for round 1.
Yeah, great question, Terry, and this is new to us as well. What we're finding in our experience right now is that if you have an open forgiveness application with the SBA, they're not accepting a second draw application in through their electronic portal. They've provided a mechanism to escalate a review of that forgiveness application, but effectively the forgiveness application will have to be reviewed and paid, a decision rendered prior to accepting that. It's brand new to us. We were just live yesterday. So this is just a common error that we're receiving with some of our borrowers who are in that pending or review status from a forgiveness standpoint. So if at all, I could caution, you do not have to have a forgiveness application submitted in order to apply for a second draw loan. And if you haven't submitted one, I'd recommend you probably look to submitting your second draw application, getting that and taking funding on it, and then working through your forgiveness application. Now's a great time to do both. Just sequence one before the other if it's appropriate, because it may have an unintended consequence of causing a potential delay on your second draw.
Yes, very good. And given everyone's anxiousness to receive round 2 funding, we wouldn't want to do anything that unintentionally slows that down. If I might, Lisa, I just wanted to backtrack on something I had mentioned earlier, and that's about these covered supplier costs. And I spoke about an example of a manufacturer using purchase orders that were in place back on the day they were funded for round one as part of a covered cost. There's an even better opportunity for those that are involved in food service dealing with perishable goods, and that is that all purchases of perishables, not just those you had committed to when you got your round one loan, every purchase during your covered period, that might be that you select up to 24 weeks, are now eligible covered costs. So, this is a great backdoor relief mechanism, if you will, to those in the hospitality industries and in restaurant and food service to be able to take probably the second largest component of their cost structure and include all of that during their covered period as part of an eligible expenditure.
All right, good. Great, great tips and details. All right, so I'll briefly cover the forgiveness process and timeline as it's laid out by the SBA. This has not changed. This has been in effect since the PPP loan program got up and running. And that is that the borrower does have basically a deferral period of 10 months following the end of their covered period. So during this 10 months, you are not required to make any payments on your PPP loan. If, however, you don't submit your forgiveness application to your lender by the end of that 10-month period, then technically you are supposed to begin making payments, and your lender would reach out to you on that and communicate that to you. Once you have submitted your forgiveness application and supporting documentation to your lender, they do have 60 days to review that and send that up to the SBA. And once the SBA receives that, they have 90 days to review that and make their decision, and then communicate back to your lender, who will then communicate back to you. If for some reason there's a balance due on your PPP loan, your lender would let you know and would let you know what your payments would be and when to start making those.
Yeah, and this brings up a really good topic that Terry, you touched on our call yesterday. The forgiveness decision is truly a personal borrower decision. You have more than enough time. The first loan that I think was funded from the SBA was April 3rd, 2020. That would put them somewhere into the middle of July that they have to have an application submitted to their lender, July 2021, before payments would begin. And if one thing we've learned through this process, anywhere from April on through today, is that things change and new things come up that may alter part of that borrower's decision-making process to be able to maximize forgiveness and maximize the benefit of this stimulus program. So I would encourage you, not only to work with your lender, but also encourage you to think about patience on this, because if something's not working for you right now, there might be a different way to look at your forgiveness application, your loan application, that might yield a more favorable result to you. And even if you're not seeing the path right now, there could be something that changes in the future. I mean, we just had the wonderful the passage of the 150,000 in streamlined forgiveness, as well as the inclusion of new eligible expenses, which certainly opens up some avenues for borrowers. But just understand it's a borrower-driven process, and they have options available to them, and they don't really have an impending need from a payment standpoint to begin this immediately. So just want to stress patience on that.
I would agree, Andrew. from the borrower's chair, I can tell you, going all the way back to last March, one of our blanket observations has been, if you don't like it, just wait. It'll probably get better. The rules will probably get better. There have been a few notable exceptions to that, but by and large, it has continued to get more borrower friendly all the way through this most recent legislation that enacted round two and added these new opportunities to maximize round one forgiveness. And if for no other reason than your point earlier about not snagging the processing of your round two application, that alone should be good enough reason to hold off on seeking forgiveness in round one.
All right, and just what to do now, really you're going to contact your lender. So whether you are just getting ready to apply for forgiveness, you'll contact your original lender. If you have not applied for a first draw PPP loan and you'd like to do that, again, you'd go to your lender, or of course, if you're interested in a second draw, again, you would go to your lender. If your business bank does not participate in the PPP program, you can go to lender match at sba.gov and they can let you know who is participating in your area so that you can contact somebody. Additionally, I do like to point out that the updated forms are on the SBA website, sba.gov/PPP, and you're going to see a lot of documents out there. This program, as we know, has changed as we've moved through it. So there are updated application forms there as a sample for you. Again, you're going back to your lender for the actual application, but there's also some FAQs on there. There's some documents that very specifically lay out different parts of the PPP program. So you can go to that website for more information and for updated information. And speaking of updated information, I do like to suggest that people stay connected to us at the Wisconsin District Office. If you're not receiving our newsletters, this is how we are announcing program changes or program opportunities or even informational webinars that we're giving. And that's at the sba.gov/updates link. At that link, you're going to go ahead and enter your zip code along with your email address. That zip code is going to connect you to the district office in your state so that you can stay up to date with what's going on with all the different SBA programs. And if you have specific questions for us, you can send those questions to wisconsin@sba.gov, and we will certainly get that question to our team member that can best help you.
Yeah, and just to echo that shameless plug, Lisa, with respect to the resources for the SBA, they do a great job of keeping people updated. It's a great newsletter to be on. You know, the sba.gov/PPP resources, as well as those available on the Treasury Department's website. While there are a lot of documents, there are some documents, they're all in a friendly PDF version. You know, if you have a particular thought that you want to search on, you certainly can search by keyword. There's, you know, I would continue to encourage you to reach out to your lender or a lender. The lender match is a great opportunity there to connect you with someone that is offering this program as well as other SBA programs. So with the Economic Aid Act, I would be remiss in not mentioning that there are significant other government resources and government loan programs that were authorized or provided to that are incentivizing not only lenders but borrowers to continue to deliver this much needed stimulus.
All right, and that's all that we have for our formal presentation, and we can certainly answer questions at this point.
So I think one thing that is on the minds of a lot of small businesses and nonprofits is whether or not these funds are expected to run out. Do they need to rush to do this? Is it always a good practice to get your application in as soon as possible and discuss with your lender? Is there a little bit of time and flexibility? What would your suggestions be as far as that goes?
I can take that, Lisa. You know, I would never discourage someone from applying as soon as they feel ready and available. The SBA and Treasury multiple times have indicated that they feel the $284 billion appropriated is more than enough to meet the need at this point in time. But there still is an opportunity for those funds to be exhausted based off of the need. I don't believe it's going to go as fast as it did in the first round. And my recommendation to any borrower would be reach out to your lender, reach out to a lender, get the process started, and evaluate when is appropriate for you to submit that application. I would anticipate if you got an application within the next couple of weeks here, you should be more than fine with respect to any sort of consternation about availability of funds, number one. And the second thing I would recommend is or remind people, different from the first draw program, the second draw program you will not be getting immediate loan authorizations from the SBA. So this will take a little bit more time, and the funds just aren't going to move as fast as they did in the first round, simply because of a couple different appropriate stage gates the SBA has put in place here to be able to protect the taxpayer funds.
Okay, good. That's great information. Another question that I have as far as the gross receipts. So I was looking into some of the PPP items for Starting Block today for our second application. I was pulling a profit and loss to try to determine eligibility. Can you talk a little bit about how you get that number? As I was pulling the P&L, I wasn't sure if we qualified or not based on some income was down, but it wasn't super down. Can you talk a little bit about, when you're looking at total picture for an organization, sometimes maybe your income is down just a little bit, but then at the end of the document, it's showing that things were okay, or vice versa, where the income looks pretty decent, and then it is showing a loss as far as the gross at the end that also includes other expenses and things. Can you speak to how those work together?
Sure, I can take a stab at that, Nora. In the context of a not-for-profit, one common question is, do we have to include grant receipts as part of our gross receipts? And the answer almost universally is yes, we do. The starting point in the case of a not-for-profit is to look to the annual tax return, the Form 990, the IRS Form 990, which classifies revenue and expenses in a certain fashion. That generally will be the roadmap for comparing on a quarter-by-quarter basis or on an annual basis to see if you meet the 25% reduction test. So it is a bit more challenging, I believe, for grant-funded not-for-profits, for those that might have an endowment or any sort of investment portfolio. Our understanding of the flush language of the statute is that sales of securities, for example, in an endowment portfolio that an NPO might have, the gross proceeds of that sale counts for revenue, even though you obviously have a cost basis in those securities. So we think that's a bit unfortunate. In the for-profit context, likewise, we always look back to the tax return. Many of the references in the the SBA's guidance are to the borrower's tax return and specific lines that are measured. There are some exclusions. I mentioned things like sales tax. One great exclusion is if a business sells a piece of equipment in order to raise funds, the proceeds from that sale of equipment is not gross proceeds for this purposes, or gross receipts for purposes of this test. So it is admittedly a very granular process to determine what the right measuring point is. So hopefully that helps guide a bit. The thing that any business owner will want to think about is, did I do anything in a prior year that might have artificially inflated my gross receipts? Did I include a sale of equipment in my gross receipts line, common accounting classification issue, such that I can now take that out for purposes of a better shot at qualifying?
Yeah, and Terry, what I would just build on there is just making sure that, communicating from our borrowers that they understand the difference between gross receipts and net income or net profit. We have had some of them putting in a net income number or a net profit number versus the gross receipts, and the SBA is looking for that gross receipt number, and it generally is going to be that number that you're looking for when you're applying for a loan, especially if you're a Schedule C business. They're using that Schedule C line 31, that net profit, as part of the determination of your eligibility and loan size determination. And in this case, we're looking for gross receipts. So just it's a common error that we've seen with a lot of borrowers is they're not listing gross receipts at times. So just make sure that they understand it's the gross receipt number.
And another question, just to cap on that, Nora, that we're often facing is, on what basis of accounting do I determine my gross receipts? It's very common for contractors, for example, to report their income taxes on a cash basis, but they may be preparing their internal financial statements on an accrual basis. We believe that we need to use the tax returns reporting basis, the cash basis in that example. It may help or may hurt, but we just caution that the right basis of accounting must be used, and it must be used consistently between the current year quarters and then your reference period quarters.
You absolutely read my mind with that last portion, Terry. So thank you. As you can tell, I've been diving into this a little bit myself. So I've got a personal angle for the entity that I am representing, as well as trying to help some of the folks that we serve. So that was very, very helpful. Is there anything else that wasn't covered in the presentation that the three of you find to be a really important element that's often missed as people are starting to prepare? I really want to make sure, because we're not able to field some live questions in this format today. I just want to make sure that there are some things that maybe aren't particularly intuitive from the directions on the websites or other reference materials for doing this. Is there any other great tips that you have for folks?
I'd offer one that we've found fairly consistently. When borrowers were calculating their round one borrowing base, we had a certain understanding of what fringe benefits could be included along with payroll. At that time, it was health-related benefits, which we commonly interpreted as employer-provided health insurance, any kind of out-of-pocket payment for health benefits that the employer had for the employee. I personally felt that vision and dental were an extension of health, and so should be included, and did that with our firm's clients. The act just passed now has nicely expanded that. It did include now dental and vision, as well as group life insurance and group disability coverage are considered covered health costs that can be added to the payroll base. Now, where that can be translated into more loan value is, while we can't go back and amend the round one loan for those expenses, we can upsize the borrowing base. For example, if you're using a calendar year 2019 base, both then and now, you can now add those categories of employer funded costs to your payroll base for purposes of determining your average. We did this in one situation with a company that employed about 100 people, and it actually resulted in about a $27,000 larger loan for round two than round one. So yeah, I would encourage anyone that hasn't included all those costs already in round one to go back and scour and make sure that they've picked up everything possible to maximize the borrowing base for round two.
Yeah, and to build off of that, Terry, and I mentioned it previously, there's different ways to look at it. There's different ways to calculate it, making sure that you're maximizing the benefit of the loan. You may have applied for a loan and the basis wasn't the not borrowing base, but the basis wasn't appropriate. At the time, it was based off of what you had, and it's changed. Going through the exercise to determine that you're maximizing that benefit right now is to your benefit. We have enough time to be able to put in the application that benefits you the most. Work with your trusted advisors, your accountant, your attorney. If you have questions, your lender certainly can guide you to the directions or the guidance that the SBA has. They're not going to fill out the application form for you or arrive at that number for you, but they can certainly direct you to the guidance the SBA has. And with that, you might end up yielding a larger loan amount by just spending a little bit more time. SBA has done a great job, especially in the legislation, to allow this to be a very simple, fast, easy process, especially for borrowers who got a first draw, that have a second draw request. It's under $150,000. They can leverage their previously submitted 2019 information if they were using that calendar year calculation. So this could be a really simple, fast, easy process for a lot of borrowers. Balance that with what might be appropriate for you to make sure that what you're requesting is maximizing the benefit for you.
One other thing that we've encountered, Lisa, you had pointed out that for businesses in the NAICS Code 72 family, hospitality businesses, restaurant, food and beverage, retail outlets and the like, that they are eligible for a 3.5 times multiple on their average monthly payroll now for round two. We've encountered situations where businesses have either failed to disclose a NAICS code in their tax return, or they have misclassified themselves. A classic example might be a brew pub that was classifying itself as a manufacturer as opposed to a retailer. And so our watchword there would be, think about whether you can legitimately classify yourself, if you aren't already, as a NAICS Code 72 business. The SBA very nicely, in some guidance just released, stated that if you didn't put in a NAICS code in your tax return, not to worry, you can now make a valid self-assessment and report under Code 72. There's some long-standing SBA regulations from back in, I think it's 2004, that say that if for your most recent fiscal year end, which for many, of course, is now December, if the majority of your revenues, costs, and deployment of assets can be traced to hospitality qualifying activities, then you can self-classify as Code 72 and now take advantage of this higher multiple. So again, for anyone that's not sure if they're on the border of or being able to qualify under Code 72, be aware that if your revenue mix has changed, you can perhaps qualify yourself.
Great, thanks, Terry. One thing that I will say, just from what I have heard over the past few months, one of the common misconceptions is people who are self-employed or independent contractors who don't have employees. Some of them, even just recently, are under the misconception that they don't qualify for the PPP program because they don't have employees. And that's not the case. If you are self-employed, independent contractor, sole proprietor, and you don't have employees, you can still qualify for the PPP program. There's going to be guidance that is actually listed in a document that's on our website that tells you how to calculate your max loan amount for that type of entity. But I just want to put it out there that just even recently, I was surprised to hear people saying that, and that's not the case. You are eligible for the PPP program. And again, we do have a document on the SBA website at sba.gov/PPP that tells different entities exactly how to calculate their loan amounts.
That's great. That's really helpful. And that was another question that I was just going to ask. So you absolutely read my mind, Lisa, because we have so many folks who were going to be participating on the call today who are, gig economy workers, or they have a really small business that started out as a hobby and it became something larger. So that'll be really great information for them.
And perhaps the only caveat I would offer to that is there is a date by which you have to have been in business in order to qualify. You must have been in business on or before February 15th of 2020. So if someone starts a small business after that date, they're effectively foreclosed here from either round one or round two funding. Also, one other area that we're seeing as a hot button is, well, what about if I bought a business or I sold a business? What are the qualification issues there? And that's beyond the scope of what I think we can delve into here on this call. But I would just offer a caution that if you are a seller and you have an outstanding PPP loan, there are situations where you must get consent of either your lender or the SBA or both to that transaction before you can close, unless you're willing to escrow your loan balance out of the sale, which is a bit onerous for most. So just a caution, if you're a seller, don't forget your outstanding PPP loan and the consent requirements that you'll have. If you're a buyer, there are situations where you can look back in time to the payroll, and now for purposes of this 25% revenue decline test, look back to the revenues of the business that you're buying in order to qualify yourself. Again, these rules are very complex and I dare say would need some professional guidance. But just because you bought a business after the 15th of February, don't feel as though you're necessarily foreclosed from a loan.
Okay, great. Well, this has been incredibly helpful. Unless anyone has anything else that they think is a really important point, I think we're ready to wrap up. Lisa, Andrew, Terry, anything further?
No, I'm good. Just encourage everyone to connect with their lender or use the resources available in Lender Match on the SBA's website in order to connect with the lender. I also encourage you to foster those relationships with your trusted partners, your accountants, attorneys. Be great advisors through this process. Just make those connections. It'll make the application process as well as forgiveness process a lot simpler for many of our small business owners.
And I would echo that. Representing borrowers, my last best word would be question everything. Don't take no for an answer until you've basically seen it in black and white, because as I said, the process has evolved, the legislation has evolved, the guidance has evolved, virtually all in a pro-borrower basis. So take no for it. You sort of see the whites of its eyes.
Yeah, that's great. Great advice, Terry. And from my viewpoint, I just want to say thank you, Nora, for having us here today and allowing us to share this information. As you probably heard throughout the presentation, things have changed with this program and they may continue to change. So again, please, stay connected to us and reach out to us, especially at the SBA, if you've got questions, and we will make sure that we work with you and can get you some answers.
And as my final shameless plug for the SBA, I will say, being a 30+ year veteran of helping clients get financing, the burden that was placed on the SBA by the CARES Act to administer this program and the loan volume that they experienced was unprecedented. In fact, if I recall, Lisa, I think the agency issued more loans in a 4-month period of time than it had in the previous 25 years cumulatively.
Yes, and last year for sure was more than cumulative, and I think it's 67 years that we've been around. And the other statistic when the PPP loan first came out is that we issued more loans in the first 14 days of the program than we had issued in the past 14 years. So yes, unprecedented is a good catch-all.
Yeah, and as a private sector professional, I can tell you this is one of our best taxpayer-funded programs and agencies that I've ever worked with.
Well, thank you so much to all of you for your participation today. So Terry, Lisa, Andrew, Associated Bank, SBA, Wipfli, thank you so very much. I have a feeling we'll all see each other again. This was a lot of fun. So thank you so much. And to everybody watching today, please don't hesitate to reach out if you have questions or would like any additional information. Email addresses and contact information for our expert panel are on the screen in front of you. So thanks to everyone. Be well, hang in there, and be in touch if you need anything.